Nikola will fail. Hello, everybody, and welcome to the NKLA stock analysis. This is sort of a part two to a previous video that I titled I'm Bearish on Nikola. This is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance for more information. So recently, Nikola's stock has definitely taken a brutal hit, down 65% since its peak of $93.99, nearly $100 per share. Had a market cap then of about $28 billion, which was pretty controversial, pretty wild for a company that hasn't delivered a single vehicle. Its market cap now rests at about $10.7 billion, but I think that's going to continue to shrink as the company struggles, deals with controversy, and overall is facing a lot of challenges ahead of itself. Now, it's still up significantly from its initial IPO price, up about 175 to 180%. So still, if you bought that early IPO price, what it IPO'd at before its massive surge in share price, you'd still be dealing with a significant gain there. However, I think it's still a little risky. Anyways, here's my reasoning and just kind of a summary of why I believe Nikola will fail in actually the near future. So first off, the founder recently left the company. That actually happened today. Trevor Milton is his name. You probably know him. He's kind of a spokesperson. He's compared himself to Elon Musk. He definitely has a bit of an ego, especially in the Twitterscape of things. And he's an interesting person to say the least, but whether he was forced out of the company or whatever happened there, he's no longer with the company. He'll be watching from the sidelines, as he stated. And that's definitely an interesting thing to happen for this company since he was such a controversial figure. On top of that, we have none to very little progress on the factory. So the factory is a really challenging aspect and really interesting aspect for this company because it really hasn't seen much work on it. There's updates almost every day. There's a YouTuber called Jeff Roberts. He posts flyovers of the factory to show progress reports. And really all we've seen is kind of tractors going around, moving some dirt, maybe a little bit of landscaping then and there, but no significant progress. And there's I have kind of a hot take on this per se. I'm actually going to give Nikola the benefit of the doubt here and say it's difficult to build a large structure in the United States right now, especially if you don't have a lot of previous influence, if you haven't built a factory before, especially if you're a controversial company and you're facing some big competitors in your competition, your landscape of things. To get the licensing, get past the regulation, to do all that stuff to build a factory is definitely tough, especially as a brand new company that recently IPO'd. That's really controversial. You're dealing with a lot at the executive level across the entire company. It's probably very stressful right now for them. So I'm not surprised that this factory is taking a while to get going. Although in terms of realistic schedule, I have no clue when it's going to be done because it definitely seems like it's taking forever, and they need to start making and delivering vehicles if they want even a chance to compete with some of the bigger players or any of the players right now in the EV world as well as the hydrogen world if that they want to create. So let's continue on here. It also just doesn't have the same passion that Tesla carries. If you followed Tesla or have been in the EV world at all, you know that there's kind of a cult fanboy following behind both Elon Musk, who's kind of treated as this godlike figure, as well as Tesla as the company. Apple kind of has the same cult following, and that cult following that's created, it helps companies significantly. It's helped Apple become the most valuable company in the world, and Tesla is almost following suit, growing immensely. Its stock price reflects partly, in my opinion, that cult following, which has done a huge part in selling the cars for Tesla. I mean, Tesla has no marketing budget for a reason because it's Tesla fans, it's cult following. They're able to go ahead and advertise the cars for them. I mean, there's so many YouTube channels that are just dedicated to Tesla, and that shows a lot. And Nikola just does not have that same passion. It has the opposite effect, actually, where it seems that people are extremely angry at the company. They're bashing its CEO or its former CEO, as well as its new CEO, attacking different people attached to the company, doing investigations on it, trying to get legal stuff involved even. There's tons of shorts, just like there were in Tesla. But the problem is, I almost feel like the consumers or the people who might like Nikola are still significantly more skeptical. Even though Elon Musk faced a lot of backlash, a lot of criticism, he still has his core following of people, and Nikola just does not have that super passionate core following that both Apple has, or it had and still has, as well as Tesla has. On top of that, they've been begging to raise more money. They've raised a significant amount of cash, but they keep asking shareholders to buy more shares. They're trying to sell more stock in order to raise money, most likely so they can just try to deliver a vehicle. I mean, they need money to build this factory, to hire more workers, to build their technology out, to keep up with the pace of innovation of their competitors, etc. They're in a very difficult problem. And we're going to go ahead and discuss what it means for their founder and his shocking departure, as this headline states. Now, some analysts were stating that this could minimize the drama, and a lot of people were saying this is actually a good thing for the company. I don't think that's the case. I think in terms of morale for this company and the fact that Trevor was such a salesperson, and let's be honest here, he was a master salesperson, I think that's going to hurt this company significantly. I think it's creating a lot of controversy around it. The fact that this company went public and then he just leaves the company really is it's a little questionable and a little sketchy, to say the least. And I think that's going to hurt Nikola's reputation pretty substantially and move the topic from Nikola and the brand Nikola to Trevor. It's all going to all be about Trevor and him and his controversy, and that's going to put a bad name for Nikola as well, since he's the founder. If any controversies come up about him, it's going to hurt the company significantly, even though he's departed from it. So anyways, I don't know. I think it's really interesting, but overall, this is definitely a big negative for the company. And it honestly follows exactly the steps that I said about Tesla killers and those Tesla killer startups. So this is my last video, why I'm bearish on Nikola. I did another stock analysis a few months ago, right when it went public. And I kind of made this list of almost a timeline of what happens with these companies that we've seen again and again. And in my opinion, Nikola is just a very large and blown up version of one of those companies, one of those Tesla killers, as you'll hear in the media. So it starts off with fancy and wild presentations. They reveal their car. It generates tons of hype. Then investments from larger companies, or they take their company public, which Nikola, same thing happened there. Then they usually drizzle off, or some stuff starts going on. They kind of fall off the radar a little bit. And that never really happened with Nikola. They didn't really fall off the radar, but they definitely kind of lost a little bit of their momentum. A lot of the hype kind of died off, and the stock price definitely reflects that. On top of that, then at number 4 here, something happens with the CEO, which is hilarious. I said that because now, we just see their founder depart from the company. People leave the company comes a little shaky, etc. Number 5, nothing of these Tesla killers actually does any substantial damage to Tesla or other competitors as well. It doesn't hurt sales, and they usually never become profitable or even deliver a vehicle to a customer. And so far, Nikola seems to be following this to heart, and I think they're going to continue to follow this list that I created. So now let's go ahead and look at its consolidated statement of operations, as well as some other numbers and data here. And this is from its last quarterly report. So we see revenues, and I highlighted some interesting points here. In red, it's generally something that is negative. So for example, we see the net loss at the bottom there increasing substantially. In terms of 6 months ended of 2019 to 2020, as of June 30th, we see a $46 million loss to a $119 million loss. So more than double the loss there, which is pretty substantial. If we see a loss from operations, it nearly doubled or more than doubled as well, which is a huge negative. Same with the total operating expenses. We have a massive increase there. We also see a decrease in their gross profit from $51,000 to $23,000. In their solar revenues, I didn't really know they were involved. It also decreased from 137 to 95, from 86 to 72, at least as of 6 months ended. Although if we look at their 3 months ended, we do see a small increase, but that's dealing with a few $1,000s. It's really not a big deal for a company that's dealing with millions and millions of dollars in cash on hand and billions of dollars in terms of its market cap. So we continue on here and we take a look at its prepaid expenses and other current expenses. And actually, I think I highlighted the wrong thing there because I meant to highlight just the accounts payable and actual expenses and current liabilities, which we see a pretty significant increase from 5 million to 9 million. So nearly double their expenses and accounts payable as well. Now, if we continue down to the bottom there in yellow, you'll see a huge increase in cash and cash equivalents. And that's no surprise. They've raised millions of dollars from just generating so much hype around this company, selling stock, etc. And the fact that they have this much cash on hand is no surprise that it increased from 100 million to 700 million, which is a great sign for this company since they're going to need cash if they're going to have any chance of surviving in their near future. And I think it's going to get more and more difficult for them to keep raising cash, especially with their founder departing, with controversy surrounding him and the whole company, with just this really slow pace that the factory seems to be moving at, and a lot of other things as well. They got a lot of pressure on, and that's going to be, it's going to be very uncertain to get investors to want to invest in Nikola unless it becomes worth less than its liquidation value or something. And I'll talk about that liquidation value in a second here. So now let's look at its assets and its total liabilities. I'm going to go ahead and do some math here with those numbers. So we got current assets and we got total liabilities. Now I take 772 million, which is its current assets, and I subtract it from 43 million, which is its total liabilities, and we get 728,933,000. I said shareholders' equity. It's actually slightly different than that, since shareholders' equity is its total assets minus its total liabilities. And then what we do is we take that number right there that we just did, the current assets minus its total liabilities, and we divide it by its outstanding shares. Now, Nikola's outstanding shares change all the time. Last time I checked, it was 360,900,000. So we divide it by the outstanding shares, we get $2.02 per share. Now, this is known as, it's kind of a Benjamin Graham formula. It's how he discovered different stocks. What he would do is find stocks that are trading at below this price. And it's a great way to value a company, especially ones that might be difficult to value. It's called the net current asset value per share formula. And that number for this company is $2.02 per share. We compare that to the actual price, what's significantly less than it, since it's currently trading at $27.30 a share. Now, this is to be expected. I don't think Nikola would ever trade at its liquidation value. But it's interesting to look at, and I say that because it's so high. There's so much hype in the industry. EV stocks tend to trade significantly higher, or any tech stocks have massive PE ratios. They trade significantly higher than their liquidation value or what they're actually worth. Price to earnings is always a super, super high ratio. Tesla's was like 700 or something like that. Even Amazon has a PE ratio, I believe, of over 200. So it's really no surprise that this company is trading extremely high. But its asset value and its liquidation value here, as it's also known as, is definitely interesting to take a look at, because if this company is to keep decreasing, keep doing worse and worse overall, well, this liquidation value is going to keep decreasing along with that. And I think eventually it may even hit zero or a negative, which to investors, especially investors who have preferred shares, is a huge scare to. As their cash decreases, since their cash is a huge portion of their equity here, their shareholders' equity, it's going to be a big problem as their cash starts to deplete over time. So definitely keep an eye on this per share, current asset value per share number, because it's going to be important in the future, I believe. Now, let's talk about competition, because another issue that Nikola is running into. And I'm not just talking about Tesla. Everyone just simply, I know Tesla's the gold standard of the EVs. It's taking over the world right now. Battery Day is coming up tomorrow, actually, on Tuesday, I believe. It's got earnings coming up. It's really doing well. Factories are under construction across the world. It's an amazing company that's growing extremely quickly right now. But there's also plenty of other competitors, and there's way more competitors now and a lot of more competition in the industry than there was when Tesla started out. And that's one of the biggest problems for Nikola, is it's burning cash. It doesn't have a factory to even create or deliver vehicles right now. But even the smaller competitors like XPeng Inc., which is a Chinese company that recently went public, well, it's actually producing and delivering vehicles. Same with Li Auto is doing great. NIO's done pretty fantastic, actually, over the past few years. And although these are smaller companies and you can compare them to Tesla or hate on them or whatever you want to do, the fact that there's just more significant and substantial competition in this space is going to be really challenging for Nikola to ever catch up to them or to break into the space if it ever actually gets its factory up and running and starts delivering vehicles. You also have plenty of other smaller EV manufacturers, and it's also just a difficult time to be an auto company, and it's a difficult time always to start an auto company. It's one of the most challenging industries to break into and to start. So I think they got a rough time ahead of them, and it's really going to take a miracle for this company to outcompete a lot of the competition, which is just getting further and further ahead. Now I'm going to talk about what it means to be, what hydrogen is and why it maybe has some efficiencies that are a little worrying. And I talked about this in my last video, so if you've already seen this, you can go ahead and skip over this part since I'm just kind of reiterating the problem with hydrogen. So here's a quote from the Volkswagen CEO. He said, "The conclusion is clear," said the company. In the case of the passenger car, everything speaks in favor of the battery and practically nothing speaks in favor of hydrogen. And here are some of the problems with hydrogen. The main one is it's just simply not as efficient. As an energy source, it's extremely inefficient. So the process of converting hydrogen into energy is you compress it, then you chill it, then you transport it before transforming the hydrogen back into energy, and that results in a 62 energy loss. And if the initial energy amount were 100 watts, well, you'd only have 38 remaining. And for consumers, BEVs are simply a cheaper solution relative to FCEVs. And you can tell that through this energy vector transition. So you start with 100 watts of energy. Through hydrogen generation, it goes down to 75. Compression and transportation, it goes down to 65. You then lose some more when you do fuel cell conversion to 40 watts. And eventually, when you have the electric power to actually drive the vehicle, ends up with 38 watts. But if you look at on the other side of things, we look at just simply the EVs. And with electric vehicles, the energy runs on wires all the way from the source to the car. So the same 100 watts of power from the same turbine loses just about 5% of the energy efficiency in this journey through the grid. So in the case of hydrogen, I'm assuming the conversion takes place on site at the wind farm. I'm just reading this article straight off because it's a great article, by the way. It's a Bloomberg article. Well, you lose a further 10% of energy from charging and discharging the lithium ion battery, plus another 5% from using the electricity to make the vehicle move. So you're down to 80 watts as shown in the figure. So you go from 100 watts, then electricity transmission 95, battery charge discharge 85. Eventually, the electric power to drive the vehicle is down to just 80 watts. So 38 compared to 80 watts. That's a huge difference in efficiency there, and that's one of the main problems with hydrogen. You know, I've always thought hydrogen is a great idea. I have lots of friends who love to think about hydrogen-powered vehicles. We've even have had hydrogen-powered vehicles during the 1900s. But it's not as great when actually implemented for a big reason. And a lot of that's the efficiency as well as the cost. And right now, the markets and the industry are just not going in that direction. They're going the complete opposite direction in full-on EVs and electric vehicles. They're adopting battery technology. They're researching it. They're investing heavily in the infrastructure for that. And there's no infrastructure in place for fueling stations for hydrogen. Whereas EVs, you don't even necessarily need infrastructure since you can just plug it in to a random wall outlet. Although that would be, very slow to charge your car, and it is very slow to charge your EV. You can still do that. With hydrogen, you simply cannot do that, and that's a huge problem. It's estimated to cost, and this is according to Trevor Milton, it's 10 to 20 million per average cost per station. Now, this number has been debated quite a bit. I've seen less than $1 million, 1 to 2 million, 10 to 20, even more than 20 million. But overall, I think it's definitely going to cost around at least in the millions of dollars per station, probably at least $1 million to build them. And if they have $700 million of cash and they can only build 700 stations with all their money, that's a huge issue for the infrastructure that they're actually going to need to build out. And they haven't built out any of that yet. That's a huge issue that they're dealing with. Tesla, on the other hand, has a massive grid. There's energy companies that simply only focus on building charging stations. So the market's going in that direction. It's not going in the hydrogen direction right now. On top of that, batteries are simply cheaper than hydrogen fuel cells. So here's a summary of it. Nikola is following the classic Tesla killer timeline pretty much to heart. It's gone through step 1 through 5, and I think it's going to get to 5, and it's going to continue to worsen, get more difficult for them as time goes on. And Nikola is facing way too much backlash and competition. It's extremely overvalued if we compare it to its liquidation value. And I think that liquidation value is going to continue to decrease as they spend more money, as their assets decrease over time, since most of their assets or their total assets is simply the cash they have on hand. So that's going to continue to decrease while their liabilities continue to increase. And you're going to see that NCAVPS, or net current asset value per share, decrease over time, making the company more and more overvalued. And eventually I could even see that number actually go negative to where their equity per share, or their net current asset value per share, is negative, which means that any of their preferred stockholders would actually, they wouldn't be getting any money, which is a huge problem. The company would owe more money than it actually has on hand, and that's a very big problem. On top of that, they're losing money, burning cash, and not progressing. So as, just to go reiterate this, as the net current asset value per share number decreases, it's going to get more and more worrying for your preferred shareholders, Because if this company were to go down and completely liquidate, they'd be the first one to receive any benefit from that. But most likely, as it decreases, they're not going to get anything, which means they're going to be more likely to sell off their shares, which means the stock price of the company is going to be more likely to decrease, especially with the backlash, the competition they're facing, just the lack of progress overall. It's going to be a very difficult time for them. Anyways, thanks for watching. Please subscribe. I hope you enjoyed this video. Make sure to check out these videos as well. Some analyst reports. They're in detail. Some new companies coming up that I've been researching. Make sure to follow me on Twitter @StockerFinance, and I'll see you guys in the next video. Peace out.